All right, what is up, YouTube? I'm back once again with another video, but this time we're going to talk about what I predicted, pretty much from the last video. And it happened pretty much just like I said it would happen. We got Square right here. Pretty much what Jim Cramer was letting people know is that Square won't be attractive until, it goes back and, and retraces the old levels of resistance and the old levels of support. And that's pretty much what's happened here. Now, like I said, we got the daily movement average showing us what's going on here, breaching below, letting us know the sellers are still in charge of the stock. And right now, what is happening right here is that we're moving off of that even base of having 50% buyers and 50% sellers. Now it's getting towards the sell side. So now we're starting to see people coming back in to buy the stock, but at the same time, there's a lot of sell orders going in. So what I wanted to do right here, I wanted to go ahead and place a trade for Square simply because it definitely does look attractive right here now that it has breached below, this daily moving average, and now it's, hitting lows. So let's see. Okay, now we just got filled at 38 or whatever the price was. So pretty much what we're looking for is that we're looking for growth whenever it goes on a discount. We see from 49 all the way to $40. It was pretty much down 16%. So now we're looking at about over a 20% discount in the stock, and this is what pretty much people are looking for. They're looking for growth. They're looking for growth nonstop. And when you have just a trigger of a bad downgrade or somewhat of a negative sentiment coming around the stock, is that when people are getting close to looking for any little bit of news to selling their stock, that's going to be the tipping point for them to hit to hit that sell button. Because remember, this stock has ran up since 25, and we go back all the way since $8. So some people were looking to cash out on their stock, and whenever you see the stock just starts to break out like this, we know at some point it does have to be checked down and go right back down and starts to balance back out. So that's exactly what we're seeing right here. And if we can go out, we see the momentum indicator letting us know that it's reaching below that downturn. So it might be more, I would say it might be more downturn coming for this stock. But as right now, I look at it as a discount. Because remember, if you look at Square, you go back to the earnings call transcript and you read what's going on, you definitely understand that this company does present growth. I've been buying since the 25s and early 20s and 30s, and then now in the 40s. So I definitely feel pretty confident about the stock since I was, ever since I see the stock start to break out on growth. And pretty much that's what's happening here. It's definitely a growth story. And whenever growth, or whenever you get that small sentiment telling people that growth is definitely leaving the stock, that's pretty much what's going to happen. You're going to see a big sell-off. You're going to see people, press that sell button immediately because they think that growth is going to stop, this and that. But really, when you're a long-term investor, you look towards the long term to see exactly what's going on with the stock and to see exactly if it's worth holding on to. And that last quarter call transcript definitely affirmed that. So let's go to Apple. We're up about 7,500 on that. Berkshire Hathaway definitely hitting a new all-time high. We see it at 191, getting really close to 192. And, whenever stocks hit that $90 or maybe that $9 range, it's easily for that stock to go to, the next incremental value, probably 200. Or if it's at $90, it's going to go to 100. And that's just simple rule. When you're investing or when you're trading, you already know that certain stocks are going to hit certain points just because that's just a pattern of numbers. We have Clorox here, Home Depot still going up for us, hitting all-time highs. Starbucks, I'm definitely still in that play, and now we just added Square to our portfolio, and I'm pretty sure for United Airlines, we see that we were losing money on the last video. Now it's turning positive for us, and it looks like it might go up. Now for Take-Two software, or Take-Two Interactive, I always get those confused together. But Take-Two, right here, we see that the stock is filling in the gaps, and we know how important that is when stocks fill in the gaps. What I tell you, right here, we're hitting resistance. What happens with people when shareholders see resistance being hit, or the traders see that resistance is being hit and we can't break out of that point, is that we're going to see some sells come in because people are going to be done with it. They're going to say, okay, you know what? We're tired of being in the stock and it doesn't want to break out. It's been a couple days, it's been a couple weeks. We haven't seen a breakout yet. So we're going to go ahead and press that sell button on this. But if you're an investor, I've been buying it since the 40s, and now it's at 111. We already know that this stock presents growth wherever it goes, but now we're just filling in the gaps right here, and that's definitely just a part of the technicals. Once we fill in the gaps, we definitely, we definitely will go back higher. So what happened right here? We ran out of momentum, and pretty much once we fill in these gaps, pretty much what we already have done so far, we're definitely going to break out and probably hit 125 or maybe 130 or whatever the price target was for the stock. But I definitely see the stock going to 150 sometime soon, maybe next year, whenever we get that results back on what happened for the holiday season. I know they had some really good deals on Grand Theft Auto, really good deals on the 2K brand, and then you got the Red Dead Redemption coming out next year. So definitely, there's still a lot of growth ahead for the stock. I don't want people to be confused about it. Just because you see the stock going down does not mean that the growth has left the stock, and we can see that momentum oscillator pretty much letting us know that there's somewhat of a curve in there. I don't know if you can see that, but maybe I'm forcing that curve in there, but it looks like you can find the bottom right there, and it might curve back up. But we see that imbalance is definitely on the sell side. So people are pretty much taking profits right here, letting the stock rest, and then whenever the stock starts to break it back out, we're going to see this thing explode to pretty much new all-time highs. And that's pretty much how the stock market works. If you see a stock run up too much, people are going to say, okay, you know what, it looks too expensive. Or the people who missed out on the rally right here, missed out on a rally at $89, they see the stock getting too far ahead of itself, or it's getting too far ahead of them, they're definitely going to come out and say, it's getting too expensive right here, and they're going to try to create some sort of a sell-off that can actually present a discount and actually buying the shares. And then once it runs back up, it's definitely just a cycle process of repeating itself. This happens every single time, but I'm definitely really confident in Starbucks going to next year. Definitely think that, it's getting ready to maybe break out again. But we see the all-time high right there, $64. And I honestly think that this stock may hit $70 next year, because pretty much what's been affirmed from the call transcript is that there's slow growth here. People know that Starbucks has slow growth, so now that the expectations are set very low for Starbucks to have growth, if they show, if they beat just, the minimum expectations of that growth, you're definitely going to see the stock go higher and start to be at $60. So right now, this stock is trading at 57. I definitely see it at pretty much at a discount, because remember, it ran up to 64.87, and after that just kind of, fell off the map. But right now, it's definitely in a uptrend, and we're going to see if it's going to retrace those levels of $58 and see if it's going to have resistance right there. But right now, this is definitely a slow growth play. Also, it definitely is a dividend play. We see it increasing the dividend. I've been receiving a dividend since the year began. But those are just the investments for me. Roku is another stock. We see it at $43. All-time highs at 51. Excuse me. Pretty much whenever you see whenever you see an IPO stock start to run up like this one has, from 15 all the way up to $51 or 43, pretty much we always wait a year, because remember, we've seen stories like this before. When new IPOs come out of the market, they run up a lot in price, just like Twilio, just like other stocks. They run up a lot in price, and pretty much they have a huge crash down once people start to fill out the stock, start to see exactly where it's going. Let's see if we can get a chart here. So pretty much right here, we see it all the way from 24 all the way to $70. So pretty much what this chart is showing us is that this might be a trade for Roku. Even though Roku is definitely an interesting company, the CEO is the one who started DVR. This is definitely an interesting company, but right now it's definitely too expensive for me to actually touch it, just because it is definitely a new IPO, and it did start at $15. I would maybe say, let's see if we can get below that $30 level, or maybe right there at $30, or maybe somewhere in between the $30 and $20 levels. Maybe we can have a deal there. But right now, this stock is definitely too expensive for it to be called an IPO, and the expectations were kind of sort of set up to where this stock was going to break out anyway, or pretty much people didn't know how to gauge the stock on expectations. So when they started to show the expectations, they were saying, "Oh wow, it beat expectations." So with that expectation beat, that big beat it actually had, is that the next quarter is that they're going to have to live up to those big expectations. So with that being said, this stock should fall right back down because it is a newly opened company. We really can't set high expectations for a newly open company. This is why I'll always wait at least 1 year before we actually buy into a IPO, simply because we have to get a feel out for the stock, and we really don't want to be buying at 51 and the stock go back down to 25 or go back to 15 or things like that. We want to make sure that investors and traders, they get a good feel on the stock. Analysts get a good feel on the stock to understand how the company works, what to base the expectation on. Once they have that, we can go ahead and move forward to actually say we feel confident in actually purchasing shares, knowing that we feel confident that it's going to beat the expectations each and every time. But right now, this is definitely just a trade. This is definitely just a trading stock for now. We see that buyers are definitely in charge. The daily moving average has been touched twice already, and from the daily moving average, we've bounced higher than that. So whenever this thing pierces below, we might see some retracement in these levels right here from this gap that happened right here all the way to $23. We see a support pattern right here at 33, support right there. We can call support right there at $40, pretty much $40 to $39, and whatever happens there happens there. But we want to see if we can get this at a discount rather than actually chasing around the stock, trying to figure out what price is the perfect buying price for the stock. So let's go to Berkshire Hathaway. I'm really big on diversification, so pretty much this is exactly what made me get into it. So we see Berkshire Hathaway is now up $4. This is pretty much a massive move for a stock that really doesn't move that much, but we see it become overbought super quick from 180 all the way to 192 really quick. And I'm pretty sure this is just because of showing that they're heavily invested in Apple. They pretty much cut all the IBM stake and just put that towards Apple, and they're just looking for growth. They're getting back to growth. They want to find whatever is going to grow the money. And remember, Warren Buffett is the head of the company, but at the same time, he doesn't trust two people to actually make those business decisions. And those two people actually made the business decision to actually buy Apple right there. But I think it was below 120 or maybe below $100, and as you see how that's paid off at the long run, in the long run, and now we see the stock is definitely trading at a price of 192, pretty much getting close to $200. So, and I'm not sure if this thing is going to split again, but I would be a buyer at any level just because of the growth, just because of the diversification over time. This thing will be worth a lot more. This will be worth a lot more money when you think about it. When you think about it in terms of the diversification that you will have once just buying one share of the company. We can check out Apple. Apple has hit an all-time high of 176, and pretty much what we're going to see from Apple is that hopefully we might see this thing go on a discount. I'm really hoping for a discount on Apple for this Christmas season. If we can get a discount on Apple, I feel pretty much confident by going ahead and buying shares for Apple. But we do own this on the virtually traded account, and we can already plot support lines right there. We see the support line is $68, and if we break support right there, we might retrace levels of 65. So that's pretty much how you plot those support levels and do small things like that. But this is what you have to watch out for, those technical lows, those technical support levels. So that way you'll understand where to buy the stock at. And we can see Netflix, what's going on with Netflix. Netflix is definitely just pretty much sideways trading. 204 is definitely the all-time high. Nothing really going on with Netflix. But if you read Netflix earnings transcript, you see that Netflix has a lot of growth ahead for it, and it has a lot of projects that they're trying to get out. And it's definitely interesting to see, where Netflix is going to go next year. But I definitely see Netflix as a growth stock. As you see, they were able to raise the prices, and people were okay with with the prices being raised and them actually bringing on more content. They're going to try to push on more content, more original content, things like that. You can find that in the earnings transcript. but it's definitely over $12 away from the all-time high. So people are pretty much taking a break. It's definitely taking a pause from being an overbought stock. As you see right here, it's definitely getting really close to that oversold level. And we know what happens when it gets to that oversold level. It definitely doubles in price, and that's pretty much what happens every single time. Let's go to Snapchat. Remember, people were buying this thing in the 28s to 25s, pretty much in the high 20s, mid 20s, mid teens, and pretty much people thought this thing was gonna, pretty much be the next Facebook. And you see right here from 29 all the way down to $13, it's pretty much just cut in half in market cap value. And this company still is not profitable yet. There's just a lot of negative sentiment going on right here. I'm not sure who's really buying this company, but you really don't have shareholder rights in this thing as well. So like I said, we have to wait at least 1 year. So right now we're at 1, 2, 3, and we need another earnings transcript to see what's going on here, to see if this company is going to be profitable in a near term future. But for right now, it's definitely an unattractive stock unless you're just going to keep trading it around. But if you see this as an investment, you see this as whatever, this is definitely a scary stock to be in. GE is definitely one. We see GE is now breaching closer to $19, which is very interesting because remember, we see the momentum oscillator definitely showing us that there is a lot of buying coming in, pushing that stock price right back up. And now we're meeting the daily moving average to see if we're going to break out here. And that's pretty much what you want to watch out for, the daily moving average, to see if the stock is going to break out. If it doesn't break out here, we might go lower, but pretty much I think the stock's going to break out higher. Maybe retrace this low right here and go back up to $20 and see, just to see what's going on here. But I'm pretty sure people are done being negative on General Electric. There has been a lot of buys come in for General Electric ever since their prices went below $20. So just because the analysts are negative on it doesn't mean the shareholders are being negative on it. A lot of people are feeling that John Flannery is definitely going to turn this company around, and with turning the company around, you're going to see an improvement in share price improvement. I guess on ROI, to make sure that the company's doing everything that that it can do to make sure that you're getting a good return. So we're going to plot. We're just going to say the dummy resistance for General Electric is at $20, just because it blew to $20 so quickly, and it fell down really quickly and went all the way to 17. But I'm pretty sure the dummy resistance will be at $20. So I'm gonna go ahead and give a price target of GE at $20 for next month to see exactly what's gonna do. Because like I said, this stock really doesn't move a lot. It's very slow. It's very slow, but it definitely had a very fast turn down, and that's pretty much the pros and cons of losing money in a stock that really doesn't move a lot. It's really fast going down, but slow going back up, and that's what you have to watch out for. So you really have to pick your points to see which point should you buy this company at. Let's see if we can go to diversification. You see the QQQ definitely retesting the daily moving average, or actually breaching through the daily moving average. So pretty much the Nasdaq is probably going to take a break here all the way until until the year is over with. So that's pretty much all the content that I wanted to talk about with you guys. Hopefully, if you have any questions, just hit me up in the messages to let me know. And Take-Two is definitely still getting hammered. It's down 6%. Nasdaq is down. S&P 500 is down, but they're really not down that much. But pretty much all the growth stocks are definitely down over 2.5%, 2.5 to 10%, including Square being down 10%. So we can see Square, and pretty much I know that we're losing money on that. The momentum oscillator is definitely showing us that it's to the downside. People are looking for this thing to touch 37 or maybe just get 38 and bounce right back up. We're definitely going to see what happens in the near future. So whatever happens, I'm definitely going to make a video on it. I could probably sell right here and make a quick trade, but I'm not really into a quick trade. We're going to see this thing go back up to 49 and probably hit $50. And really, people are just trying to see what price can they buy the stock at, so that way they can actually find growth, or they can actually find value in holding this in the company shares. So hopefully that'll be I would say the maximum downturn would probably be $35 where the stock will hit below. But the earnings was definitely strong enough for this thing to sustain a $40 price target on it, or maybe a $50 price target on it, just because of all the sheer growth that this company will have. But until then, we're gonna see what's going on. So take care, guys. If you have any questions, like I said, let me know in the messages so I can get back with you. Take care.